The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon and welcome to today's webinar. My name is Amanda Nichols from CCIQ and I'll be your facilitator for today. Joining us online is Matt Richardson, the Senior Corporate Dealer at OFX, and CCIQ's International Trade Manager, Gueorguieva. Welcome to you both. Now, OFX is a partner with CCIQ and it's one of the world's leading global international payment specialists. This is the third webinar in a three-part series we've been doing with them. Previously, they have shared some key themes on driving global currency markets and some considerations for exporters when it comes to optimizing your payment routes. But in today's webinar, Matt and Diana are going to take you through some key questions your export plan must answer, from understanding your market to your currency strategy, as well as 7 key fundamentals to getting ready to export. Now, before we begin, I'll just let you know that you can send your questions through to Matt and Diana at any stage during the webinar, just by simply typing them into the chat box that appears on the bottom right-hand corner of your screen. We'll collate them all together and go through them at the end of the presentation. So now I'm going to hand over to Diana. She's going to take you through the first half of today's presentation. Thank you, Diana.
Good morning, everyone. My name is Diana Gueorguieva. I'm the Manager of International Trade for the Chamber of Commerce and Industry Queensland. I have been asked by our marketing department to deliver for you today a 20-minute presentation on the topic, the 7 fundamentals to exporting. It is a mega topic, and I will try my best to give you the basics for the allocated time. The webinar focus will be on fundamentals to exporting. However, as a start, I would like to capture your attention on why would you consider exporting. Why export? To make additional profits should definitely be your major drive. Entering the overseas market with your product or service provides you with the opportunity to make additional profits. Increase the market size for your products because of the new opportunities presented, and expand your customer network. Entering the overseas market can also help to expand the growth of your business and improve your return on investment. These are 7 fundamental steps to successful exporting your product or service overseas. CCIQ can assist your business in increasing your knowledge and capabilities in relation to each of these steps you can see on the screen, so that your business is the best possible position for success in the overseas market. And now I will take you through these 7 steps. Prior to entering the overseas market, you will need to understand if your product or service is exportable, and if your company is capable of exporting this overseas. Looking at why your existing customers within Australia buy your product is a great way to identify key purchase trends within your target market that may be transferable overseas. Ensure that your company has sufficient funds required for you to export overseas, as well as identifying any weaknesses within your current organizational structure that may cause issues and prevent the successful exporting of your product. Contact CCIQ partner OFX to determine your forex capability and identify your risk requirements. In relation to assessing the export capabilities of your product, some of the questions you need to find the answers are: what product services you are selling now? Are these product services capable of being marketed overseas? Is your product unique, and will that uniqueness transfer to other markets? Can you adapt your product or service if required? Why do the existing customers buy your product or service? Is it because of the superior quality, low price, the after-sales service, or something else? Is this competitive advantage transferable in overseas markets of interest? The next question is determining whether your company is capable of export. To be able to determine whether your company is capable to export, you have to review your resources in terms of organizational structure, personnel, funds available, technology, production facilities, and the level of commitment to export of top management. Some of the questions you need to address are: what is your vision, goals for your company, where you want to be in X period of time, and the profits? How does export expansions fit in, and do you have the resources for this? Can your current organizational structure accommodate export operations, and are you prepared to make changes when required? Are you prepared to increase production capacity if required? Do you have dedicated, experienced export personnel? Do you have 100% top management commitment to export? Top management commitment to export was identified as a #1 factor affecting export marketing performance in a study, The Effects of Barriers to Export on Export Marketing Performance, I have conducted a few years ago for Griffith University. It is a very, very important factor. Determine what strengths you can build on. Review what you're good at. Is your strength in research and development? Or have you developed advanced technology? Is it the customer service? In terms of, do you stay in touch with your clients and provide after-sale service or additional service? Is your marketing expertise your strength? Or is your strength the production process? Are you able to produce a product at reduced cost, standardized to fit the requirements of the market and sell in volumes? How adaptable you are? Can you respond quickly to changes in the market or to big orders? Do you have a unique product, and have you already created a niche place in Australia? Are your company's strengths transferable to service overseas markets? You have to clearly identify your strengths to support export. However, the weaknesses have to be addressed as well. You may find it difficult in making your own assessment, and perhaps you may consider involving the services of independent, experienced international trade consultant to discover the areas requiring your attention. We're here to help. Organizing for exports and identifying opportunities is the second step to successful exporting. Obtaining preliminary desk research, market selection evaluation, and market exploratory visits are the key elements of the process. Extensive research is crucial to the success of exporting your product or service to ensure that your company is in the best possible position to launch into the overseas market. Identify which markets you want to focus and prepare all relevant marketing collateral and product samples. Preliminary desk research from reliable information sources has to be undertaken. Some of the areas to be covered are current exports and potential target markets, the current political, economic, social, competitive environments, the relevant laws and regulations, labeling and packaging, import licensing and quotas, the rules of origin requirements, certificates of origin requirements, export logistics, and tariff and non-tariff barriers to trade. Tariff barriers to trade, we are referring to tariffs on imports imposed by overseas customs. Non-tariff barriers examples, import licenses, quotas, seasonal import regimes, state subsidies, complex regulatory environments where it's legal, banks, product registrations, and many others. These are not visible, and they can change without warning. Some practical advice for you in relation to your preliminary market research: make a need-to-know list. Use reliable information sources such as Austrade, the Chamber of Commerce, Trade and Investment Queensland, and other government and non-government entities. I will provide you with a list you can consider referring to in the end of my presentation. Select data carefully and verify the data by cross-referencing or other activities and look for major trends. Preliminary research is very important to help you with your export market screening, selection, and evaluation. As a guide, you can see the outlined above criteria. Modify these criteria to reflect what is specific to your product or service. Gather statistics under each criterion heading. You can look back at previous years to identify trends, match the information to your strengths, and then rank the markets. Market exploratory visit is the final element for this section. This is where you will be planning your trip, visiting the market, organizing your marketing material, including your business cards translation in both languages, product samples, gifts where appropriate, and any other points required to obtain the maximum outcome from your visit. Keep all your expenses records, as you can claim under the export market development grants delivered by Austrade at a later stage. Some practical advice: do not try to sell on your first visit. Your visit is for exploratory purposes and building key relationships in this market. The next step to successful exporting is determining the appropriate market entry strategy. Which strategy will best help to achieve and maintain price competitiveness? Factors to consider: the level of required control over your goods, the physical distribution capabilities of the potential distributors, if this is your chosen option, the after-sale services requirements, the available funds, and the level of barriers that have been identified in the market. An experienced person will contact the networks will be required if there are many barriers to entry and local knowledge and connections are required. Possible market entry strategies: agent. Fixed commission, will not take possessions or title of the goods or distribute them. Handling orders and the sales paperwork and the company contact for a network of importers and distributors. Distributor, this is the preferred option for many exporters that desire a representative to accept sole marketing responsibility, including taking possessions of the goods. The distributor makes his profit by adding a normal markup to his imported cost. Please note, finding the right distributor is critical to your business. The reputation in the market, market knowledge and coverage, his connections in the market, selling skills, ability to plan, to forecast, to conduct meetings, to have people management skills, to be easy to deal with are some of the many factors you should look for when selecting your distributor. Other options: joint venture, in order to develop greater control over sales and distribution, and to handle local manufacturing, assembly, and packaging. Some manufacturers set up a foreign subsidiaries or JVs operation with local partner. Licensing is a grant of permission, usually for a payment of royalty or a fee by the licensor to the licensee to exploit some form of IP, right, patent, trademark, copyright, or design. Franchising is a sophisticated form of licensing where the franchisor usually remains in considerable control over the market development. The next step to successful exporting is the marketing and planning side of your export operations. This is a mega one. Unfortunately, we are very restricted with time today, and I'm giving you just the main points to start your thinking in this direction. Total export planning includes market research, export market plan, export strategy, export sales forecasting, product strategy and management, pricing strategy, communication strategy and management, distribution, channels and logistics management, marketing resources, financial management, and marketing control. If you need assistance with your export planning, we are here to help. You can see on the screen the components of a basic export plan. If you have multiple export markets, you may consider individual export plan for each market. Till now, we spoke about what you need to do your export operation to succeed. However, equally important is to know what not to do. Common mistakes to avoid are lack of planning and lack of commitment, are some of the major ones. Other mistakes include neglecting export during domestic market boom, failure to build relationship with the market, lack of language understanding, blinkered approach where strategically you limit your options and not understanding the relevant regulations. When exporting a product or service overseas, you will be faced with several regulatory and also legal requirements. The next step to successful exporting is addressing these requirements. Legal requirements examples are, for example, the legal agreements, where you should seek professional legal advice. Some of the agreements you will come across are the contract of sale, the distributorship or agency agreements. IP protection, patents and trademarks registrations are required in market. In relation to regulatory requirements, export licenses, import quotas, import licenses, custom controls, a few to mention. Getting paid. Good financial risk management, adequate insurance and payment procedures should be put in place. Export Finance and Insurance Corporation can help you with this. You may also consider marine insurance to cover for possible damages. Speak to your bank in relation to letter of credit assistance if chosen as a payment option. The next step is export logistics and export documentation. CCIQ can assist with ensuring that your business has the required export documentation prior to entering the overseas market. You can see on the screen where CCIQ is part of the export supply chain. Many of you probably are not aware that the Chambers of Commerce have been issuing non-preferential certificates of origin since 1923. We have been authorized under various international conventions to do so. More recently, closely working with customs authorities and accommodating the requirements of the various free trade agreements Australia has with other countries, the Chambers of Commerce are issuing preferential certificates of origin, or as we call them, FTA certificates. As a matter of fact, the World Chamber Federation, which is uniting the global network of 12,000 chambers, is the author of the International Certificates of Origin Guidelines publication, which establishes the standard procedures for issuing the attesting certificates of origin by all chambers across the globe. The World Chamber Federation also manages the ATA Carnet system, which allows for the duty-free and tax-free temporary import of goods to the World Chambers network. In Australia, through the Australian Chamber of Commerce and Industry, ACI, we are authorized by the Department of Foreign Affairs and Trade, DFAT, to issue preferential and non-preferential certificates of origin. ACI, which is the overarching body of the individual state chambers of commerce, ensures that the authorized chambers follow strict documentary evidence issuing procedures and remain JASANS compliant to be able to issue preferential certificates of origin. The key message here is that we not only issue certificates of origin and ATA carnets, but we also have the systems in place and the global support to monitor and resolve issues at overseas destinations. And if there are any irregularities or issues with your certificate of origin, we can intervene through ACI and DFAT and resolve the matter at the customs port level. And these are the various certificates of origin we issue. As most countries accept electronic certification, we issue both preferential and non-preferential certificates manually electronically. There are also other export documents we can assist you with, such as ATA carnets, certificates of free sale. We can certify a visa certification letter for Saudi Arabia, and any other documents requested to be certified by the Chamber of Commerce. The final step to successful exporting is to ask for assistance from reliable sources. There are many resources available for you to find helpful information, advice, and support when you're looking to export your product or service overseas. Asking for assistance from a reliable source allows you to further understand the requirements involved with exporting and ensures that your business is in the best possible position prior to entering the overseas market. If help is required, contact us to get you in touch with the right person and organization. And this concludes my presentation. I will now hand you over to Matt Richardson from OFX, and Matt will talk about understanding your market and currency strategy.
Thank you so much, Deanna, for that. Obviously a hard act to follow, and obviously start with a welcome to all attendees today. And for anyone that's participated in any of the earlier webinars, I apologise if there is any sort of duplication of the information there, but we'll really just be looking to build on those webinars and reiterate the key considerations in terms of foreign exchange that you need to be across when entering the export market. So we'll start with a quick overview and introduction of OFX again. OFX is one of the larger Australian non-bank providers of foreign exchange strategies and services, and we actually now employ over 300 people across our global offices, which allows us to offer a 24-hour serviceability throughout Monday to Friday to all of our corporate clients, and we even have a customer service team available over the weekends as well to help manage other inquiries that you might have outside of a sort of a live market and trading event as well. Throughout the slides today and the rest of the seminar, we'll just be looking to cover a few simple themes and help you to develop an understanding of where you might fit into the spectrum of sort of your risk strategies and what tools you can employ going forward. But before doing that, I think it is quite important to consider what OFX can offer you, and also in following that, the key themes and drivers of currency markets at this point. OFX helps you to, develop a currency strategy, so we can tailor a strategy that's specific to your requirements and unique demands. And in that it also includes, of course, risk management tools, which we will cover off specifically going forward. On top of that, you have that 24-hour dependable service and protection and security of your information, as well as the ability to speak with one of our professional dealers to get an insight as to what might be happening within markets at a particular time. And of course, perhaps most importantly, great pricing. You using OFX, you're able to leverage not just each deal's requirements, but your overall needs in terms of foreign exchange exposures. And OFX looks to take a holistic approach, I guess, when applying a rate or a margin to our clients to ensure that we're looking at that bigger picture and that you're not pigeonholed into perhaps making a small payment for suppliers or receiving a small payment from a customer that wants a sample against perhaps a larger order that might be placed later on. Moving forward, we'd really like to start now by focusing on the key themes or drivers in markets, as we have seen a significant shift in this landscape over the last 12 months particularly, and a lot of that's actually now being driven by geopolitical issues, and I'm sure all of you are aware of the trade hostilities currently undergoing or currently underway between China and the US at this time, and that has an important impact on our own Australian dollar value. Australia is heavily linked with China as our major export marketplace, and it's, I guess, the damage that these trade hostilities are having on its growth outlook and domestic policy settings is having an impact on the value of the Australian dollar, in that we've seen it fall from levels around 80 cents that we touched earlier in the year to these current levels where we're hanging just above 70 US cents. Now, while we have seen a consolidation at this level throughout the last few weeks after a sort of a dip towards that handle at the start of the month, there is a suggestion that we will be seeing another move lower, if not through the end of this year, certainly into next year, as there's a few key fundamentals that have now changed in that landscape that are really damaging or dampening the demand for our own Australian dollar. Those key factors are an expected fall in the value of commodity prices throughout next year, especially as the trade war escalates and the demand from China perhaps is reduced. We have seen numbers out of China recently that have suggested that there is still export demand there, but a lot of those have been backdated as key manufacturers and industries got ahead of the tariffs being employed by the US to increase production, and we are expecting that we will see certainly a slowdown, if not the end of this year, then certainly first half of next year. You have to couple that as well with a widening gap between US and Australian interest rates. The US Federal Reserve is expected to raise their interest rate again in December and up to 3 times throughout next year as well, while our own Reserve Bank is firmly entrenched within a neutral policy setting, and we're really not expecting them to make or take any action in terms of upward interest rate adjustments, most likely until 2020 now, in fact the first half of 2020. So that gap in interest rates means that the US dollar has a yield advantage now, a yield advantage that will grow. And in the past, when the Australian dollar has enjoyed that advantage, it's been an option for investors to buy Australian dollars and receive a higher interest return. But given that swing, we're now seeing funds that would have ordinarily been channeled into our own currency now channeled into the US dollar. And that is dampening demand for the Australian dollar on moves sort of back above 71.5 and up to 72 through the short term. As well as those US-China hostilities, of course, you've got the ongoing Brexit developments and the emerging concerns out of Italy as well at the moment, creating, I guess, an uncertainty to the broader Euro picture and European market picture moving forward. So those uncertainties are weighing on investors' appetite for risk, which is another key factor that drives Australian dollar value. When risk appetite appetite is strong. Markets and investors tend to buy into currencies like the Australian dollar and New Zealand dollar. So for exporters, like everyone attending today, these events perhaps spell opportunities for an improved Australian dollar return, especially if you are invoicing your customers in their local unit. And having that information and that understanding of what's driving markets is certainly important when you're negotiating contracts with your customers and ensuring that you protect your bottom line value of Australian dollar returns. Moving forward now, and obviously there are a number of other key themes that and these developments, or I guess key drivers, do change from minute to minute, month to month, day to day. So it is important to stay on top of those. But one thing you need to identify once having that understanding of perhaps where the market is moving is developing, I guess, your appetite to deal with that risk that is out there within the market. And we find that our clients tend to fit into one of three categories. They're largely risk adverse, and on arranging a contract to sell a product to an offshore client or service to an offshore client, they want to ensure that they lock away the value of their Australian dollars and the client's cost in their foreign currency, taking out all elements of risk, while others may enlist a moderate approach to risk appetite, where they will look at options to perhaps protect themselves against downside moves, but also leave themselves open to be able to take advantage of upside moves, but at the same time giving them the ability to take advantage of still leaving themselves open, to those market movements. And the final sort of risk tolerance level there is a high tolerance for risk, and that clients that have that sort of attitude to risk would typically just leave themselves open to market movements and absorb the costs and benefits that come with exchange rate movements. Obviously, in some occasions, it's going to move in your favour, while as others, it may move against you. And those with a high tolerance to risk are happy to balance those out, I guess, and where the benefits and gains that come with it. In identifying your risk appetite, then there's a number of key ways that you can stay on top of that volatility, and obviously being well informed is probably the key strategy there. And by staying on top of current market events and driving forces, you do cover a lot of that, but obviously also identifying your own break-even points and implementing specific risk tools and parameters that help you protect against those marks. So by being informed, don't just necessarily mean understanding what is driving the market, but also understanding the products available to you and what you can do to ensure that a particular contract remains profitable, or your overall revenues and returns remain profitable, and you're not eating into those by simple exchange rate movements. We'll look now to, I guess, just cover off a few of the key tools that we would typically use with our customers, and a couple of the key hedging strategies. Now, spot contracts is perhaps the simplest of foreign exchange tools. It's just simply a buy now. It's for the here and now. It essentially allows you to lock in a conversion of funds at the current market rate. Now, that allows you some flexibility in that it gives you the ability to respond to receipt of funds from a customer and ensures that you're getting delivery of those Australian dollars back into your accounts as quickly as possible. It's a relatively straightforward product. You simply go into the market and come to a provider like OFX and request a rate, secure a transfer, and then deliver the trade. The, I guess, adverse or cons to that particular product is it doesn't give you protection to adverse market movements that may happen in the timeline that you have between securing a deal with a customer and actually then delivering the final product and receiving payment. And it doesn't give you a lot of flexibility with your cash flow once entered. So it's really primarily a product designed for having received the payment from a customer or having funds available that you then want to convert back into AUD. The second product that we'll look to explore today is forward exchange contracts, and that allows you to lock in a rate today for settlement at a future point. And this can be a very useful tool, especially when negotiating with customers, especially when you actually price them in their foreign currency or their own local unit rather than back in Australian dollars. It allows you to, I guess, ensure that you're offering your customer a price in their foreign currency, their own local unit, that still ensures that your Australian dollar return meets your expectations and ensures you're remaining profitable for that particular project and not eating into those bottom lines. It can also help, obviously, with your relationship with the customer to be able to say, look, here's a cost in pounds. Throughout the life of the contract, we don't need to necessarily amend the costing of your particular product or the value of the service based on exchange rate moves, and it gives that certainty to both sides of the equation there that those costs are fixed. Obviously, in saying that, it does perhaps price you out of the ability to take advantage of any appreciations in the value of the currency that the customer may be dealing in. For example, if you do quote a fixed value of pounds for a particular project and lock in an exchange rate near these current levels within that 1.8 range, coming back to the Australian dollar, and in the coming months when the Brexit deadline is reached, perhaps a deal is arranged and we see some upside value for the pound, that could then obviously lead to a bigger return in Australian dollars had you left it open to market movements. But in saying that, as well, you could quite easily go the other way and see the value of the pound fall and obviously mean eating into your bottom line AUD return. Of course, as well as locking in that exchange rate, the customer may as well say that given the value increase for their particular currency, they would expect a decrease in the value of what they may need to pay given your return is realised. So it's important to make sure both parties understand that in locking in that rate, you are fixing that to both sides, and both sides are taking away that ability to gain or benefit from an upward move in their particular currency. The final product we'd look to consider as well is perhaps applicable for customers with a high tolerance to risk is the limit order, and that allows you to monitor particular rates on the upside and ensure you don't miss out on any rally. But I guess the negative impact to the limit order is that it doesn't protect you from the downside. So it is important to consider putting in floors or stops or notifications that, as to when the market moves against you, to ensure that you're not constantly watching upside moves and then exposing yourself to a break below your break-even level by not having in those protections on the low side. But the limit order, while it triggers a spot deal, so a contract that needs to be settled straight away, you do have the flexibility there and then extending that into a forward contract. So perhaps if you're working with a customer and you don't want to enter into a forward contract immediately, you can look at the limit order and say, well, let's agree that if the market reaches this point, both sides are happy, we'll automatically trigger a deal to cover the foreign exchange exposures, and then you can then roll that into a forward contract if manufacturing's not perhaps complete. Of course, there are other hedging strategies available, and OFX is always happy to speak to those and make sure we develop a tool that best suits you. That can involve one of those products, it can involve all of those products. It's about tailoring a solution that best fits not only the business as a whole, but obviously contract to contract, and knowing that you have those different options available can certainly help you in working through those steps that Deanna's already covered when entering into an export market. Of course, the OFX team is here 24 hours a day to answer any questions, and we'd always encourage you to reach out as CCIQ members. You are entitled to a fee-free facility with our service and, of course, a preferential rate structure as well. So thank you very much for listening.
Excellent. Thank you very much, Matt and Diana. We do have a couple of questions and some time to get through these. First one is actually for yourself, Matt. What is the best way to identify foreign exchange risk and protect against its adverse effects?
Yeah, excellent. Thanks, Diana. I guess building on what we discussed in this webinar, there it is really the key tool is staying informed, and as I said, it's understanding not only what's driving market forces at the moment, but also the products that are available to you to protect against that. Whether that's entering into a hedging strategy, whether it's charging your customer up front for a particular project, whether you request a deposit from that customer, whether you open up accounts in foreign currencies within your own bank here in Australia, or you have offices offshore, exploring all the options available to you to ensure that you're minimizing the risks and exposures that come with playing in the foreign exchange market, and ensuring that adverse currency moves don't mean the end of your foray into the global marketplace.
Thanks, Matt. Diana, question from an attendee. I'm trying to find the right business partner in Malaysia for my export business. How should I go about it?
You need to talk to Austrade and Trade Investment Queensland. Austrade and Trade Investment Queensland has extended international reach with trade commissioners in various markets, including Malaysia. Please follow up with us after the webinar to get you in touch with the right people.
Okay, and just another one for you, Diana. Someone needs some assistance with drafting their distributorship contract. Is that something that you can help with?
Yes, Amanda. The International Chamber of Commerce actually has various international trade publications, and the ICC Model Distributorship Contract is one of those publications. The publication can be used as a guide, and we can assist you with purchasing the book. We can order it for you. Alternatively, you may consider contracting an experienced international trade lawyer. So it's up to you whether you would like to spend $120, $30 and having a book as a guidance, or just work with the lawyer through the contract.
Okay, and just one more for you, Matt. What are the benefits of using a specialist FX provider over a bank?
Yeah, thanks, Benda. I guess with your bank, obviously they offer you so many different particular products that you may not, or they may not have a particular focus on the FX component alone. And by using a service like OFX, you're able to develop that relationship with a single point of contact. You'd be appointed a specialized dealer or associate to your account that helps to build a relationship with you, understand the timelines that might be associated with a particular payment, and helps you to develop a strategy that best suits those. So it's having that facility that is more personalized to that particular part of your business and that focus, as well as the benefits, I guess, that come from the OFX facility being better pricing structures. You're able to leverage OFX's relationships with global banking counterparties to reduce the fees and costs involved in making those transfers as well. So it's taking advantage of, I guess, OFX's marketplace and knowledge to reduce your own costs back here, rather than the bank looking at you as a single individual customer. The bank's looking at OFX and allowing you to obtain the rates applicable to our services and the scale of our turnover, as opposed to your own. So you're able to leverage better rates and better fee structures through that overall relationship that OFX can offer.
Okay, thanks for clarifying that, Matt. Thank you to you both for presenting today, and thank you to everyone who has joined us. We will be sending out an email either today or tomorrow with a copy of the recording and the presentation slides and some other useful contact information. So make sure you look out for that. Thanks again for joining us, and we look forward to having you at another webinar. Enjoy the rest of your day. Thank you.